Insurance is one of the most valuable things for a community association. It's particularly valuable to liability exposures, liability claims, because they can get very expensive very fast. General liability claims, D&O claims skyrocket just because of the cost of defense. And that's because, in my mind, attorneys have figured it out. They figured out how to work the system. And we're paying the price, so to speak. Episode 6, E6 for those scoring at home. That's an error on the short stop. Why are we talking about baseball, dude? This is Covering HOAs with One Hot Mic. What's really important is for the association to understand the interaction between the insurance carrier and the community in the claims process. So understanding the difference between filing a claim and putting a carrier on notice of a claim is important for the board of directors so that they can make informed decisions about that claim or in general, the community. There was a time when we could just put a carrier on notice, and we would do so by calling the broker and saying, hey, we have this thing that might become a claim. We got a threat of a lawsuit, or feels like somebody might sue us. This thing happened at a board meeting and somebody said, oh, I have an attorney and I'm going to sick my attorney on you. So we would just call the broker. The broker would either just keep a file note or send it to the carrier, and the carrier would keep a file note. But so many problems occurred because there's a breakdown in communication on the carrier side. There's a breakdown in communication on the broker side. And those breakdowns led to sometimes a carrier not covering a loss, or a carrier being sued for bad faith because they didn't do what they were supposed to do, or they didn't get the message. We don't do that anymore. Today, putting a carrier on notice means the carrier is going to open a claim. They're going to assign a claim number. They're going to assign an adjuster and record the date of loss. Then the carrier is going to kind of sit back. And we tell them this is for notice only. And they say, okay, let me look at some of the details and make sure that we don't believe we need to make this more formal and have somebody actually review the file, maybe assign defense counsel. We are just going to sit back and wait. And if something comes up, let us know. That's really important to let them know when something changes, if something changes, because they need to be one step ahead. We're asking them through the insurance process. We've paid a premium, and that premium is so that they would take care of this stuff. So if we don't tell them what they're supposed to be taking care of, what are they going to do? Plus, it's always better for the carrier to be the one making a decision on whether to take this forward another step, whether to assign defense counsel and get defense counsel looped in. The association or the board of directors decides we're going to hold off on this because we don't think it's going to be an issue, or we don't want to take this further, and then it needs to go further. There's policy conditions that could be challenged. There's the D&O policy specifically has a claims made requirement. Actually, today it's called a claims made and reported requirement. So a claim is made to the association, to the insured, saying you owe me money because you hurt me. And then the claim needs to be reported to the carrier. And those two things need to happen in the same policy period. If they don't, there's a chance that coverage would be declined. There are a number of other conditions as well. I'm not going to dive into those too much because those are the weeds. Bottom line is, when you know something's happening or you hear about something happening, call your broker, let your broker make the decision, help you make the decision to tender a claim, and then let the insurance carrier make the decision on what the next steps will be. And that's when we just notice the carrier. When we actually do a tender, because a noticed a D&O claim notice could be closed after a certain amount of time, but it's done so by the carrier. Again, the carrier's just kind of sitting back and saying, hey, what's going on? Nothing? Okay. And then a year later, what's going on? Nothing? Okay. So they'll make the decision on whether this is going to be something that they want to keep open or they're going to close it. Again, better for the carrier to do it than it is for the association to do it. But we already have a recorded date of loss. We already have a reported claim. So if we have to go back and reopen that claim because we do receive that lawsuit or something more dramatic, then we can, and we use that date of loss rather than having waited to report that. We have the recorded date of loss, and the carrier will go back to that date. If we actually receive a summons and complaint, if we actually receive a lawsuit, or we receive a letter from a owner's attorney or anyone's attorney for that matter, or we read or receive an email from a homeowner saying, I'm going to get an attorney and I'm going to sue you, then we want to open a claim. We tender that, give us all the details. We share that with the carrier. The carrier, again, acknowledges the date of loss, puts details into the file, assigns an adjuster. The adjuster contacts the insured, typically through the management company, because we have the management firm and community manager are the liaison, if you will, to the board of directors. And then potentially, depending on the severity of the allegation, assigns defense counsel. And that is how the carrier is choosing to pursue this. That's what we've asked the insurance company to do by, again, paying premium. We are transferring the cost of defense, of court fees, judgments, and settlements. We paid a premium. We said to the insurance company, will you cover this expense for us? And the insurance company said, yes, here are our terms. One of those terms is what's called a self-insured retention. Now, it's not a deductible. A deductible on a property insurance policy is an amount of money that is deducted from the payment of a claim. That is, it's taken out of the total loss. For a self-insured retention, the association or the insured is responsible for paying X amount of dollars towards their defense before the insurance company will pick up all the rest of the costs. So let's say your self-insured retention, or SIR, is $5,000. The association is going to pay $5,000 worth of the assigned defense attorney's fees. And then when that $5,000 is used up, the insurance carrier will get the rest. So when a claim is filed, or when a carrier is reviewing the claim, the loss history of the community is affected. And that is the ratio of money paid in claims versus money collected in premium. If that number is too high, a carrier might say, I need more premium for this. If that ratio is too high, the carrier may say, this doesn't fit us at all. We're not interested in this risk. The loss history is one of the main things that the insurance company is looking at. Noticing a carrier and actually filing a claim carry different weights. When we notice a carrier, it's less harmful to the loss history, because that's kind of a cover your butt sort of thing. A CYA. We're going to do this because we want to make sure, maybe in an abundance of caution, that if we need the carrier knows, and we're not going to be stuck with some coverage issues. But it's easy to explain why we have that claim open, what we think is going to happen with that claim. Like, for example, it's not likely that this will ever evolve into something, so we don't worry about that. The carrier can take all that information and make their own decision, but it's, like I said, it's easier for the claim to be explained when it's just the notice only that it potentially isn't going to be harmful. That said, if there are a lot of notice-only claims and they're for similar reasons, carrier might raise a red flag and say, hey, what are you guys doing on the board that you're not fixing? What behavior is it that everybody is complaining about and you're not doing anything about it? What is it? Why are there 5 claims for a threat of a lawsuit because someone is challenging the suspension of their facilities access because they haven't paid assessments? We want to know more about that, because your business practice may be the problem here. And if that's the case, we're not going to insure you because you need to fix that business practice first. When we actually tender a claim, when we actually have an adjuster assigned, when there is a defense being made or paid for, then the loss history is impacted more because there's money being spent. If we tender too many claims, again, similar losses, multiple claims will indicate that there's a problem with the operation or the decision-making of the board. And the insurance company says, we don't want that. You need to go somewhere else. There's pretty much always going to be an option for insurance. It's just, what's the cost? It's the cost of the policy. It is other policy conditions like higher SIRs, exclusions on the policy that would be specific to a type of occurrence or even to a specific individual, if that individual appears to be consistently filing similar claims. I've seen plenty of that specific to this person because this person is pretty active when filing or with the claims at renewal. Or while we look at other carriers, those carriers again are looking at the loss history and evaluating risk factors like the frequency or severity of claims, the types of losses, predictability of reoccurrence. If the carrier isn't profitable on the account, then the carrier may make those changes in order to hopefully become profitable. It's a business. Just keep that in mind. They need to make money. So they need to be profitable. If they can't make changes or they can't add conditions to the policy that will move them towards profitability, it's likely that the carrier will retire from the risk, which is a nice carrier way of saying you're canceled or non-renewed, or we're not interested. And that's the typical thing. The preferred carriers, the admitted carriers, the names you know, the ones that are on TV, they're going to say no. We don't want this when there's a challenging loss history, which moves us to other carriers who charge more premium and have more conditions. Obviously, keeping a cleaner loss history opens up more options. Don't ignore or avoid filing legitimate claims. You bought insurance. That's what you bought it for. But use your experts as a guide, your manager, community manager, your insurance professional, legal counsel. Use your industry professionals to guide you or ask them to guide you through this decision making. One of the most important pieces of the business judgment rule is following the advice of experts. If you follow the advice of experts, the insurance company can defend you better. It doesn't mean you did something, well, certainly doesn't mean you did something knowingly wrong. If you did something knowingly wrong, it's not going to be covered. So you made a decision, an error in your decision that someone called out. The full title of Directors and Officers Liability Insurance is Errors and Omissions. So that's what it's for. So don't ignore legitimate claims, but formal tenders and notices should be approached strategically. For property claims, property damage liability claims, for property claims, look at the impact of a deductible and the total loss, as well as the long-term effect on premium. for a property damage liability claim. This is like sprinklers. Somebody says the sprinklers in the common area have been spraying on my wall. The wall is leaking into my unit and causing mold. That's a common damage liability allegation. And with that, you'd look at the SIR and again, the long-term impact on premium. If our premium is going to go up by 15%, but that's going to be less than what would be paid, and it's going to go up 15% for a number of years because the loss is going to take a while to get off of that loss history. Sometimes it's 3, sometimes it's 5 years, depends on the carrier. If you compare what you're going to pay an additional premium versus what would be paid to just settle the matter, you may consider working with legal counsel and settling it. Let's take a step back. Insurance is part of, not all of, a risk management program. One of those, the piece that insurance is a transfer of risk. If you ask your insurance broker for their advice and they give you advice and you follow that advice, you have transferred some, if not all, of the exposure of something coming back to haunt you. You've transferred that to the insurance broker because they are the one that gave you the advice. Same goes for a legal counsel. If you ask legal counsel and legal counsel says we should do this, and then you do that thing, then legal counsel, it's their professional liability that's really on the hook, not yours. So you've transferred that exposure to that professional. If you are not working with a professional that you're comfortable with, if you are not working with a professional that isn't giving you a feeling of trust, that isn't giving you the confidence that this decision is being made, or if you feel like, you know what, I need to get a second opinion because you don't like what somebody said, you may have to think about working with a different professional, because the whole point is for you to have a trusted professional advisor. If you're not working with someone you trust, then what are you doing? You need to be able to trust that person. You also need to build that trust. You need to work. All of us need to work to have that trusted advisor relationship. The insurance broker in particular, and this is maybe completely biased, but we feel commoditized. We feel bought and traded. We are professionals. We have licenses. We have designations. We have done everything we could to show that we're an expert in this field. And I just think the nature of a condominium or a community association, because of how the board of directors work, how they change quite often, I think the insurance broker gets kind of lost in the shuffle, and that's a bill we have to pay. So we don't really look to build those relationships with our brokers. We only talk to our broker when something goes wrong or the renewal premium increases. Talk to your broker more often. I don't know how that would be necessary for you, but insurance questions come up all the time. What is this? Why is that covered? How is that covered? And in today's world with Zoom, it takes 5 minutes out of anybody's day to get an answer to that question. And I'm a firm believer in let your community manager know that you have a question about insurance. Then ask your insurance professional to join you on a Zoom call at your next board meeting. 5-10 minutes. We just have an insurance question. Maybe it could have been an email. Perhaps. But here's the point. If I jump on a Zoom call and answer your question, one, we're building our relationship. And two, you got an answer to the question. Versus you ask your manager, community manager, to email me and ask me your question. Let's say I get it the next day, but typically it's going to be 2 or 3 days, if not a week later, when they're doing all their summaries for the past board meeting. I get the email and I answer the question. Again, typically it's going to be very quickly, at least in my case, but some questions might be a little more detailed. So, let's say it takes another 2 or 3 days. The manager puts the answer to that email or that question into your next board packet. So you're not going to review it for another couple weeks. You're not going to see an answer for a couple weeks. And you're going to go to the next board meeting. You're going to open up your board packet and you're going to say, now, why did we ask this question again? Versus 5-10 minutes on a Zoom call. Mike, we just wanted to get your opinion on this. We have this issue. Great. Here it is. Here's my opinion. I'm going to take that moment. I'm going to summarize that in an email and I'm going to send it to your manager because I want a record of what I said. And I want a written record of what I said so that there's no questions down the road because we're not recording these things. Though I guess we could. But anyway, I digress. The quicker answer means you can move on to the next thing. The quicker response means you can put something else on your agenda that won't take up time at the next board meeting. Insurance claims management is not just about fixing damages, avoiding future losses. It is a control of the loss history because the loss history directly affects the association's financial stability, insurance expenses, and access to competitive options. So understanding the difference between filing a claim and noticing a claim is important for making those strategic decisions. And a consultation with an insurance professional aids in accurate and appropriate coverage selection. Actively working with insurance or with industry professionals will guide the implementation of proactive measures that can avoid or control exposure. Thoughtful practices help protect both the association and the membership for the long term. Before we go on, just please like and follow, subscribe, do all those fun things. And thank you to LeBar Oxney Insurance again for giving me the opportunity to chase this little rabbit, if you will. What did I hear recently that was quite moving? I was listening to Trevor Noah and Simon Sinek. Simon Sinek, he's a cat that developed a thing called Knowing Your Why. And Trevor Noah is a comedian, show host, and pretty much brilliant thinker, though. His book is fantastic, by the way. He was talking about the difference between being kind and being nice. And I never thought about it. I never thought about the difference between those two things. His example was, if you see someone with something in their teeth and you don't say anything about it because you don't want to embarrass them, that's being nice. But if you do tell them about it so that they can remove that thing, and then they won't be embarrassed when they go to their next whatever it is, that's being kind. It's honest and it's open, and I'm not doing this to hurt your feelings. I guess you can be kind in a nice way. In The Fugitive, in the movie The Fugitive, not the original, the remake with Harrison Ford, Tommy Lee Jones. Near the beginning of the movie, Harrison Ford has escaped the train wreck. And, oh, spoiler alert, there's a train wreck. And it's called The Fugitive. He escaped something. He's shaved and he's cleaned up and he's now in a hospital. And he's pretending to be a doctor, trying to kind of evade police and security and things. And he sees a security guard walking down the hall. And the security guard turns to him and says, "Hey, Doc." Basically saying, "Hey, your fly's down." And doctor says, well, Dr. Harrison Ford's character says, "Oh, thank you." And he zips up the fly. That's a nice way to be kind. A not nice way to be kind in that same situation would be, "Hey, butthead, zip up your fly." And if I was being nice to someone, just being nice to them, and I didn't want to embarrass them because their fly was down, and they walk into, let's say, a conference room or a convention, and they're walking around with 100, 200, 300 more people with their fly down, I would rather you been kind and told me about it than been nice and ignored it. That's kind of the job we have today, is to be nice and kind. And it doesn't take much. It's really easy to be nice. It's really easy to be kind. It's really easy to show love. So go out there. Be nice, kind, and loving. Thanks for hanging out. We'll see you next time on Covering HOAs with One Hot Mic.